Greetings. This video is a compilation of my TikToks from 2021. I made another video compiling my TikToks from 2020 where I discuss my thoughts on TikTok. So if you haven't watched that, to briefly recap, I don't want you guys to feel like you should sign up for TikTok, even though I'm making educational content on there, because TikTok is an app that is focused on short form attention grabbing video content. The videos on TikTok are up to 1 minute long, and the way the app is designed is to grab your attention in the For You page and to feed you content that keeps your attention. So it's supposed to be very addictive, and it is very addictive. And honestly, I have to admit that I have wasted more time on that app than I would like. But more than that, I would say the majority of the content on there is not enlightening, it's not inspirational or motivational. The majority of the content on TikTok is quite vapid. And there is also quite a lot of content that is a bad influence for you. I do make content focusing on business, money, and self-improvement on TikTok, and there are others making educational content as well that might be helpful for you. But honestly, long-form content beats short-form content when it comes to learning, when it comes to learning something beyond a superficial level. You can't really learn something in depth with 1 minute videos. So the TikToks I make, I share small nuggets of information that could be helpful for you. But really, if you really want to learn something in depth, my long form YouTube videos are better. And in general, long form content is better when it comes to learning beyond the superficial level. So those are my thoughts on TikTok, and I also need to add that because it's focused on short form content, it can weaken your attention span because it's meant to grab your attention, see how it uses the algorithm to see what you respond to, what keeps your attention. So it can really weaken your attention span because of that, because it just feeds you the most attention grabbing content. Whereas when you really want to learn something, you need to maintain your attention even through the boring parts. And that's why I think longer form content is better at not only teaching you things in depth, but also training your attention span, which is important because when you do things in life, when you do important things, a lot of it requires going through boring phases in the project or in whatever you're doing. And that requires a good attention span. And with longer form content, you will train your attention span to be stronger. Whereas short form content, like the ones from TikTok, can weaken your attention span. So basically, if you do not have TikTok, do not sign up for TikTok unless you're a creator. So basically, I create content on TikTok because it has a high organic reach. And if you are a creator, you could take advantage of the high organic reach from TikTok. But honestly, I've given this some thought, and I think I'll focus more on long form content for the reasons I talked about, because it really teaches you things more in depth and it trains your audience to have a longer attention span. So if you care about your audience, then focus more on long form content. And if you do have TikTok, then you might as well learn something from it. So follow me on TikTok, follow other educational creators on TikTok, and yeah.
Baby, you my everything, you all I ever wanted. We could do it real big, bigger than you ever done it. You be up on everything, other hoes ain't never on it. I want this forever, I swear I could spend whatever on it. Cause she hold me down every time I
feel your eyes, they all over me. Don't be shy, take control of me. Get the vibe, it's gonna be lit tonight.
I'm never sour, I'm just smoking something much louder. She asked me if I do this every day. I said often, that's so many times. I think I'm falling for you.
Baby, you my
stars. I could really use a wish right now, wish right now, wish right now. Could we pretend that airplanes in the
Cause you got that dream, daydream look in your eye. And I got that red lip classic thing that you like.
What's a balance sheet? A balance sheet is a financial statement that shows the company's assets, liabilities, and shareholders' equity. And to keep it simple, assets are what the company owns, liabilities are what the company owes, and shareholders' equity is the amount of money the investors have invested in the company. Why is shareholders' equity equal to assets minus liabilities? Shareholders' equity represents the total value of the shares that the shareholders own for the company, and that essentially equals to the assets, which is what the company owns, minus the liabilities, which is what the company owes. Another way to think about it is how much money the shareholders would get if they liquidated the company, and that's essentially the money they get by selling off their assets and paying off their debts or liabilities. Why assets equal liabilities plus shareholders' equity? Assets represent what the company owns, and it pays for what it owns by either borrowing money, which is what liabilities are, or spending the money investors invested, which is shareholders' equity. What's an income statement? An income statement is a financial statement that reports the company's revenues and expenses and uses that to calculate the profit or loss. So when the revenues are greater than the expenses, you get a profit, and when the expenses are greater than the revenue, this is negative and you'll get a loss. The statement will also give you the earnings before interest, tax, depreciation, and amortization, which is known as EBITDA, and I've done a video on this, so check it out. And it'll give you the earnings after all of these have been accounted for as well. What's a cash flow statement? A cash flow statement is a financial statement showing the cash flowing into the company and the cash flowing out of the company. It's separated into 3 sections showing the cash flows from operating activities, investing activities, and financing activities. What's a statement of shareholders' equity? A statement of shareholders' equity is a financial statement that goes into detail on the shareholders' equity section of the balance sheet. And it's usually divided into these sections: common stock, additional paid-in capital, retained earnings, accumulated other comprehensive income or loss, treasury stock, and preferred stock. Treasury stock is basically the shares the company buys back, and preferred stock is a special kind of stock.
Baby, you my everything, you all I ever wanted. We could do it real big, bigger than you ever done it. You be up on everything, other hoes ain't never own it. I want this forever, I swear I could spend whatever on it. Cause she hold me down every time I...
The stocks billionaires are buying right now. So if you've seen my previous videos, you know I use dataroma.com to find the stocks billionaires are trading right now. As usual, let's start with Warren Buffett. Here are Warren Buffett's current holdings. And here is his trading activity. Let's move on to Bill Gates. These are the stocks Bill Gates is holding, and this is his trading activity the past quarter. Now we'll look at investor Carl Icahn. Take a look at his holdings and his past quarter's trading activity. What about hedge fund manager Bill Ackman? Bill Ackman only owns a few stocks, and he also didn't do much the past quarter. Maybe hedge fund manager David Tepper will give you more investment ideas. Let's start by looking at his holdings. And he traded quite a lot the past quarter, so that should give you quite a few investment ideas. Let me tell you a secret about motivation. So a lot of people know what to do to put their life on track, to get things done, to achieve. A lot of people know that they should go to the gym. A lot of people know they should do their homework if they're in school, or they should work hard. And a lot of people with businesses know that they need to work hard, or they need to do this or that to really be successful. But the thing about this is that most people think they need motivation before they begin to work. And that is the problem. The thing about motivation is you need to start working, you need to start doing, and you need to start taking action. And then the motivation will come. You will become invigorated when you take action, when you start doing, when you start working. and you will be unstoppable. You will build momentum, and you will really be unstoppable. Let me tell you a secret about motivation. So, a lot of people know what to do to put their life on track, to get things done, to achieve. A lot of people know that they should go to the gym. A lot of people know they should do their homework if they're in school, or they should work hard. And a lot of people with businesses know that they need to work hard, or they need to do this or that to really be successful. But the thing about this is that most people think they need motivation before they begin to work, and that is the problem. The thing about motivation is you need to start working, you need to start doing, and you need to start taking action, and then the motivation will come. You will become invigorated when you take action, when you start doing, when you start working, and you will be unstoppable. You will build momentum, and you will really be unstoppable.
Come da venga vedi I love you.
What's a SPAC? SPAC stands for Special Purpose Acquisition Company, and it's also known as a blank check company. So what a SPAC is a company that is formed to acquire another company. So a SPAC does not have any commercial operations, and it raises money through an IPO for investors to funnel money into the SPAC in order for it to identify a acquisition target and to acquire that company. So what happens if the SPAC does not identify an acquisition target? Well, the money that investors put in is put into a trust, and the trust can invest in stocks, commodities to grow that money. And usually there's a deadline of 18 to 24 months for the acquisition, and if there is no acquisition, the money is returned to the investors. But if there is an acquisition, the SPAC and the company merge to form a publicly traded company. What's the de-SPAC process? The de-SPAC process is the merger process between a SPAC and its acquisition target. Basically, the shareholders of the acquired company receive shares of the new company or cash. Why go public through SPACs? The three main reasons why companies decide to go public through SPACs is, first, price certainty and control, because when you do a SPAC acquisition, you can negotiate the price and have more certainty over it. And second, to take advantage of the management expertise of the SPAC company, because the acquired company can take advantage of the SPAC company's expertise. And lastly, to bypass the traditional IPO process, which has its own inconveniences. How investors evaluate SPACs. Because SPACs do not have any commercial operations, there's not much for investors to go off of. The main purpose of the SPAC is to acquire an acquisition target. So investors mainly evaluate the SPAC by looking at its management or sponsors, who are mostly the same people. And they want to do this to make sure that the SPAC is managed by people capable of identifying and acquiring a good acquisition target, and also capable of delivering expertise assistance to that target if necessary. Last but not least, why form SPACs? Why does anyone do anything in business? Mainly to make money. And a SPAC gives you an opportunity to acquire a private company early before it gets really big and expensive.
I can see clearly when you're gone. On myself, I'm blinded by the lights. I can see clearly when you're gone. On myself, I'm blinded by the lights. No, I can't sleep until I feel your touch. I said, ooh.
How to maintain control of your business by using voting trusts. Let's say you start a company. At first, you own 100% of the company. In order to expand, your company needs money or capital, and that can either come from you or investors. If you're new to business, your first investors will probably just be your friends and family. And let's say you split it with 2/3 of the ownership going to you and 1/3 going to your friends and family. Let's say your business does well and now you can expand with outside investors. So for the second round of ownership, let's say now you have 40%, your friends and family have 20%, and outside investors have 40%. But now you only own 40% of the shares of the company, so you don't have control over the company and you can get outvoted. In order to maintain control, you and your friends and family can assign your shares to a voting trust where you act as trustee and have the voting power of the combined shares. What is corporate inversion? Let's say you have a business and you start operating in the United States. When you make money, you pay taxes to the US government. Now, let's say your business does well and you expand overseas. When you make money, you not only pay tax overseas to where you operate, but you also have to pay extra tax to the United States because the United States has a global taxation system. A solution to this is corporate inversion. So how corporate inversion works is that a business in a high tax country like the USA can merge with a business in a low tax country like the Cayman Islands. And then the business can domicile in the Cayman Islands, which has a 0% corporate tax rate. So for the situation now, you just pay taxes on your US income to the US government, and you only pay taxes on your overseas income to whatever overseas countries you operate in.
Let's do this right. Let's go to this that be like Friday nights. This that make you feel alive. I feel like we in paradise. Paradise. Don't know if it's a drink I pour, but I swear I've never loved.
Never mind, 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 never mind. What if I left and it made no sense? And you tell your friends and they hold your hands, baby. Never mind, never mind, never mind, never mind, never mind, never mind. What if I left and it made no sense? And you tell your friends and they hold your hands, baby. Never mind, never mind, never mind, never mind. What if I left and it made no sense? And you tell your. Are you ready to scream?
The stocks billionaires are buying right now. If you haven't seen my previous videos, I use dataroma.com to find out the stocks billionaires are buying and selling. Let's check out Warren Buffett's holdings and trading activity. So Warren Buffett owns all these stocks, and this is what he bought and sold the past quarter. Let's see what Bill Gates has been up to. This is Bill Gates' holdings, and this is his trading activity. Moving on to legendary investor Carl Icahn. First, we'll look at his holdings. And it seems he only made a few investments the past quarter. What about hedge fund manager David Tepper? David Tepper owns quite a lot of stocks. And he also made quite a lot of trades the past quarter. Now let's check out hedge fund manager Bill Ackman. Here are his holdings, and this is his trading activity the past quarter. What's behind the recent Bitcoin crash? The main spark was China's recent move to limit the transactions of cryptocurrencies. But another challenge is that mining cryptocurrencies like Bitcoin requires a lot of energy. For example, Bitcoin consumes as much energy as entire countries, and it even consumes more energy than wealthy countries like Sweden and Norway. The environmental concerns have prompted influential figures like Elon Musk to pull support from Bitcoin and other cryptocurrencies. It also gives governments who already do not like Bitcoin more reasons to limit its use. All of this have contributed to the recent drop in the price of Bitcoin. What is tax loss harvesting? Let's say you have two stocks. One goes up $1,000 and the other goes down $1,000. If you just sell the stock you made money on, then you would have a $1,000 profit and you would have to pay a capital gains tax, which is normally 15% in the United States. So at the end, you have a profit after tax of $850. But if you also sell the stock you lost money on, then you would have a loss of $1,000, which can offset the money you made on the other stocks to have a total profit of $0 and you pay $0 in taxes, which allows you to keep all $1,000 of the money you made on the profitable stock instead of just $850, which is much better. And you already lost money on stock B anyway, so you might as well use your loss to pay less taxes on your other income, and this is called tax loss harvesting. What's the wash sale rule? This is related to tax loss harvesting, so if you haven't watched my video on that, watch that first. But to recap, if you sell a stock or a security at a loss, you can use that to offset the taxes you would have to pay on your other income. However, if you buy back that same security you sold at a loss within 30 days, that is called a wash sale. The wash sale rule is a rule from the IRS that says if you actually go through with a wash sale and buy back the same securities you sold at a loss, then there will be no tax deduction. And so you will not be able to offset the taxes you would have to pay from your other income. How you can use your Bitcoin loss to save money on taxes. As you probably know, the price of Bitcoin has been going down the past month. So if you lost money on Bitcoin, let me show you how you can take advantage of the money you already lost. You will have to do something called tax loss harvesting. I explained this in a previous video, but basically you sell the investment you lost money on and you use that loss to offset the taxes you would have to pay on your other income. Normally, you would have to be careful of the wash sale rule, which states that if you buy back a security that you sold at a loss within 30 days, then that loss cannot be used to offset your other taxes. Fortunately for you, Bitcoin is not considered a security by law, so the wash sale rule does not apply. Which means that if you bought Bitcoin when it was around $50,000 and you sold it when it was around $38,000, you can use your loss to offset your other taxes, and you can also immediately buy back your Bitcoin if you think it'll go back up. The stocks billionaires are buying right now. So if you've seen my previous videos, you know I use dataroma.com to track the stocks billionaires are buying, selling, and holding. Let's start with the most famous investor, Warren Buffett. As a value investor, Warren Buffett accumulated a lot of stocks over the years. And here is his trading activity the past quarter. Now let's look at Bill Gates. Bill Gates believes in Warren Buffett, which is why more than half of his portfolio is of Berkshire Hathaway, which is Warren Buffett's holding company. And his trading activity is also pretty similar to Buffett's. Let's move on to Carl Icahn. Let's look at his holdings and trading activity. Let's see what hedge fund manager Bill Ackman is doing. As a high conviction value investor, Bill Ackman only owns a few stocks. This is his trading activity. Let's check out David Tepper. More investment ideas for you to look into. What's a business grant? Let's say you own a business, but you need money to fund your business. One option is taking a loan, but the downside to that is that you would have to pay back the money. A business grant, on the other hand, will provide you with the money to grow your business without requiring you to pay it back. So you might be thinking this sounds too good to be true, but actually a lot of organizations provide business grants to businesses that align with their goals, mission, or purpose. Follow or subscribe to see my next video on the top small business grants. Top 8 small business grants. If you don't know what's a business grant, I explained it in my previous video, so check it out. But basically, it's free money for you to grow your business. In no particular order, first we have the FedEx grant, which grants up to $50,000. Next, we have the NAVS grant, which grants up to $10,000. KKR and Hello Alice also offers grants of $10,000. The Barstool Fund also offers grants, and the grant amount depends on your business. If your business operates a live venue, you may be eligible for $10 million in grant money through the Shuttered Venue Operators Grant hosted by the Small Business Administration. GoFundMe also offers $500 matching grants to small businesses if you raise $500 on GoFundMe. If you're a member of NAS, you can apply to win a grant of $4,000. If you're not a member, you can apply to be a member. If you're a veteran of the U.S. military, you can apply for the Veteran Small Business Award hosted by the Street Shares Foundation. And the winner of the competition gets $15,000, the second place gets $6,000, and the third place gets $4,000. Check out my YouTube video on small business grants for more details. 10 things you can invest in to grow your wealth. First, you can invest in commodities like gold. Gold, for example, has been a reliable store of value throughout human history, and it has always trended upwards in value. Second, you can invest in bank products such as CDs or certificates of deposit, which offer higher interest rates than regular savings accounts. Although you won't earn very high returns, it is a very safe way to grow your wealth. Third, you can invest in currencies. It can be foreign currencies such as the Chinese yuan or the euro, or it can be in cryptocurrencies such as Bitcoin or Ethereum. Fourth, you can invest in bonds, which are basically loans to the government or corporations or whoever is issuing the bonds. Fifth, you can invest in mortgage-backed securities, which are bonds that are secured by mortgages or home loans. Sixth, you can invest in the stock market, and you can do so by investing in either individual stocks or index funds or ETFs. Seventh, you can invest in investment funds like mutual funds or hedge funds. Eighth, you can invest in retirement plans like the Roth IRA, the traditional IRA, or the 401k. Ninth, you can invest in real estate. And if you find the cost too steep, you can always invest in REITs or real estate investment trusts, which are stocks of companies that own and manage real estate. Last but not least, you can invest in private businesses. And you can do this through private equity or startup investing or just investing in business ventures. There are so many things to invest in. Let me know in the comments what you are investing in and what you think are great investment ideas. Follow and subscribe for more tips on how to succeed in business, in your finances, or in life. Why people have always invested in gold. Recently, there has been a lot of inflation, with the inflation rate rising to 5.3%, which is a lot. All over the world, governments have been printing money to fund programs to address the COVID-19 crisis, and this has led to high inflation. Now, gold is an asset that people invest in to hedge against inflation. And to understand why, you have to understand the history of money and the history of gold. Throughout history, people have used various forms of money, from stones to glass beads to wampum belts, but gold was the most popular and the most successful form of currency, and there are many reasons why. Gold is a rare resource on Earth, and not only that, but it is also hard to produce. Gold mining is a difficult and expensive process even today, and throughout history, it was very difficult to produce gold and flood the economy with gold, which makes gold very resistant to inflation. Even with modern mining technology in the past century, the annual stockpile growth rate for gold never reached 3%, and it has mostly stayed below 2%. You can also see that the existing stockpile for gold is about 60 times higher than its annual production, which makes it very resistant to inflation. Gold is also non-corrosive and durable, much more so than silver, and that makes it very long-lasting and very reliable. Although gold was rare, it wasn't as rare as diamonds or platinum, which put gold in the perfect position where it was rare enough to be resistant to inflation, but it wasn't so rare that it couldn't be used as a currency. Even when countries switched to paper currencies, these currencies were backed by gold and could always be exchanged for gold. And this was called the gold standard, and it lasted until the 20th century. Even though a lot of countries have left the gold standard, a lot of governments still treat gold as a currency. They keep gold in their reserves, and although they officially say gold has been demonetized, they're not acting like it by hoarding gold in their reserves, and this keeps gold valuable because governments are still treating it like money. But even if governments stop buying gold and stop treating it as a valuable form of currency, gold is still valuable because, like platinum or diamonds, it is rare and it is beautiful, and there are a lot of industrial and commercial demand for gold. So people invest in gold because it is a reliable alternative currency, and it also has a lot of inherent value in commerce and industry. The card is you, the folder is your financial security, and the glass is your job. If you lose your job, you're screwed. Once again, the card is you, the folder is your financial security, but now you have multiple streams of income. The middle one is your job. Let's say you lose your job. Because you still have multiple streams of income, you're still afloat and you're not screwed. Build multiple sources of income so you have a more secure foundation for your financial security. Follow or subscribe to learn how. Instead of spending all your time on social media consuming other people's content, create your own content on social media and get paid for it. Here are some social media platforms that pay you money. First, let's start with TikTok. With the TikTok Creator Fund, once you meet some specific requirements, you can sign up and get paid for your content. Second, let's look at YouTube. With the YouTube Partner Program, you can sign up and get paid based on the ad revenue you generate from your videos. Third, we have Medium. With the Medium Partner Program, you can get paid based on how many views and how many claps you get on your articles, and also you can make money from referring other people to sign up for Medium.com. Fourth, we have Odyssey. Here you get paid in library credits, which is the cryptocurrency for the site. So you get paid by doing normal activities like uploading content, getting views, getting tipped by viewers, viewing content, following channels, and inviting other users to join. Currently, the site is ad-free, but with more ads, you can actually make even more money. And although right now you can only exchange library credits for cash in crypto exchanges, in the future, it'll get easier to exchange it for cash, hopefully. So I hope these ideas will help you, and you can start creating content so you can make money on social media rather than just spending all your time consuming. We all know that what we feed our stomachs affects our physical state, but a lot of people forget that what we feed our minds affects our mental state. Studies have shown that our brain subconsciously processes the information we feed it, even when we're sleeping or doing nothing. What we feed our minds directly affects what we think, how we think, and the solutions we come up with. Feed your mind with things that educate you, that inspire you, and that motivate you, and you'll be able to come up with more solutions and better solutions in your life. You'll be more inspired and more motivated. Avoid time-wasting content and toxic content because your brain will subconsciously adopt negative ways of thinking and negative behaviors. There's a saying that we are what we eat, but a more complete saying would be we are what we consume. There's a reason why so much personal finance advice talks about passive income, and it's not because it sounds easy or it's an easy sell. For much of human history, many human societies were divided between those who owned the land and those who worked the land, and those who owned the land received passive income from the land they owned. Often, they or their ancestors won the land through conquest or through military or government service. But once they acquired that land, they were financially free. Because they had passive income, they could do other things in life. Even though society has changed a lot since industrialization, there is still a divide between those who own and those who have to work. And you want to be on the side of those who own the assets that drive the modern world, the businesses, the real estate, etc. And you'll be like the traditional aristocrats of historical times. You'll be financially free. How big of a problem is inflation right now? Ever since the pandemic, governments around the world have been printing money to deal with the economic problems during these tough times. In the United States, the money supply went from $4 trillion at the beginning of 2020 to about $20 trillion now. Hopefully, I don't have to explain why printing money leads to inflation. It's basic economics. When you have more money chasing the same amount of goods, your money will depreciate in value and your purchasing power goes down. If you look at the latest data from the Bureau of Labor Statistics, you can see that the inflation rate is 5.4%, which is a lot. Prices for gasoline rose 42.1%. For car and truck rentals, 42.9%. And for meat, 12.6%. Follow and subscribe to learn what to do about inflation. 7 things to invest in to hedge against inflation. Make sure to stick until the end because I'll be saving the best for last. First, you can invest in real estate. Real estate prices and rental prices go up with inflation. The main drawback is property taxes and taxes on rental income. Second, you can invest in commodities. Commodities also rise with inflation, but I'll save the best 2 commodities to invest in for last. You can also invest in the stock market to prevent your wealth from depreciating from inflation. Another option is Treasury Inflation Protected Securities, or TIPS. Now we'll get to the best 3 investments to make to hedge against inflation. They are cryptocurrency, gold, and platinum. Since this video is only 1 minute, I don't have time to explain why these 3 hedges are the best, but I will in other videos, so make sure to follow and subscribe. We all know the formula of working at a job for money. In other words, exchanging your time for money. But there's another formula to make money, and that is to make your money work for you. In other words, investing your money in wealth-generating assets. If you look at the richest people in the world, all of them derive the vast majority of their wealth from the capital accumulation of their assets, usually the businesses they own. Go beyond working for money and make your money work for you. Money is powerful. Instead of only using it for consumption, also use it to invest and make even more money. That is the secret of the richest people in the world, and that is how you can scale your wealth to great proportions. The investment case for platinum. Gold has been the go-to precious metal to invest in, especially in times of inflation. Throughout history, many civilizations have used gold as a currency, and even today, many governments recognize the monetary value of gold. That's why they hold large gold reserves. However, platinum and diamonds have historically been considered more valuable than gold because they are also very beautiful, but they are much rarer. Platinum is actually 30 times rarer than gold. There is also a lot of other commercial and industrial demand for platinum, including in the rising green energy sector, which can send platinum demand and prices higher and higher. Usually, platinum trades 1.25 times the price of gold. However, the price of platinum now is lower than that of gold, which gives you the perfect investment opportunity to take advantage of the relatively low price of platinum. Governments are printing money like crazy. At the beginning of 2020, the US money supply was at $4 trillion. Now it is at $20 trillion. That means that 80% of the US money supply was printed in the past 2 years. Already, this is creating inflation problems in the economy, and this will affect you as well. Follow and subscribe to learn about what actions you can take to protect yourself from inflation.
Okay, we ready?
Yep.
Bits. HBK, BOB, are not a fuck we coming.
The stocks billionaires are buying right now. If you haven't seen my previous videos, I use dataroma.com to find the stocks billionaires are buying, selling, and holding. Let's start with Warren Buffett. Here are his holdings and recent trades. What about Bill Gates? This is what Gates is holding, and here is his trading activity. Let's look at Carl Icahn. He only owns a few stocks, and he also only made a few trades. Let's move on to Bill Ackman. He owns fewer stocks, and also made few trades. What about Seth Klarman? He owns a lot of stocks, and made a lot of trades. Let's end with David Tepper. He also owns a lot of stocks, and made a lot of trades. Subscribe on YouTube for a more in-depth video. Sharing some quotes from the book I'm reading. It is an ironic sign of the depth of modern-day economic ignorance fomented by Keynesian economics that capitalism, an economic system based on capital accumulation from saving, is blamed for unleashing conspicuous consumption, the exact opposite of capital accumulation. Capitalism is what happens when people drop their time preference, defer immediate gratification, and invest in the future. Debt-fueled mass consumption is as much a normal part of capitalism as asphyxiation is a normal part of respiration. The only cause of economic growth in the first place is delayed gratification, saving, and investment.